Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. The US Senate Banking Committee vote on the Clarity Act is coming up fast. Markets are consolidating as Bitcoin holds near $90,600, Ethereum trades around $3,093, Solana sits at $136, and XRP hovers around $2.10. The Clarity Act vote scheduled for January 15th could reshape crypto regulation. The bill needs 60 Senate votes to advance, requiring at least 7 Democratic votes alongside all 53 Republicans. Galaxy Investment estimates strong committee approval with all Republicans plus 2 to 4 Democrats could lead to a final Senate vote of 65 to 70. The crypto industry is watching closely, but there's a catch. DeFi advocates have identified 4 red line requirements that must be included, including developer protections, self-custody rights, money transmitter clarifications, and illicit finance controls that don't create impossible compliance burdens. Over 100 crypto businesses, including Coinbase, Kraken, Ripple, A16Z, and Uniswap Labs, signed a letter last August stating they cannot support a bill without these protections. Ripple secured a major regulatory win. The company received Financial Conduct Authority approval in the UK through its subsidiary, granting it an electronic money institution license and crypto registration. This allows Ripple to manage both crypto and fiat payment flows within a compliant framework. UK-based financial institutions can now send international payments using digital assets through Ripple's licensed platform, positioning XRP as a settlement asset within institutional cross-border flows. This approval removes compliance barriers that previously prevented banks from adopting blockchain payment rails. BNY Mellon launched tokenized deposits on blockchain. The world's largest custodial bank with nearly $58 trillion in assets under management is now enabling institutional clients to settle bank deposits on a private blockchain. The platform mirrors client deposit balances on a permissioned blockchain to accelerate settlement speed and improve liquidity management. Initial users include Intercontinental Exchange, Citadel Securities, Ripple Prime, and Circle. BNY positions tokenized deposits as distinct from stablecoins, as they sit within the banking system and can pay interest. VanEck released a long-term Bitcoin valuation framework, projecting Bitcoin could reach approximately $2.9 million by 2050 in their base case scenario. The analysis assumes Bitcoin adoption as a settlement asset, handling 5 to 10% of international trade volume, central bank reserve diversification into Bitcoin, and long-term annualized volatility of 40 to 70%. Their bull case projects $53.4 million per coin, assuming Bitcoin captures 20% of international trade and achieves near parity with gold as a primary global reserve asset. Ethereum's validator exit queue fully cleared, easing delays that had impacted liquid staking protocols and validator withdrawals. This development improves network efficiency as Ethereum continues implementing its roadmap toward blob capacity expansion and zero-knowledge proof validation. Meanwhile, Morgan Stanley filed with the SEC to introduce 2 new crypto exchange-traded funds, with one linked to Solana, signaling growing institutional interest in alternative Layer 1 blockchains. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.